Boom! What is up, Waves Capital? It's Royce Jacob. Welcome back to the channel. In this video, we're going to be talking about how Bitcoin has just broken below a very significant line of resistance, why many investors currently believe that new 2022 lows could potentially be on the horizon, but most importantly, why I don't. So, keep this one short and sweet for you guys today. We will be jumping into the charts to talk about what's going on in front of us. But to kick off the video, I want to summarize some of my fundamental thoughts on Bitcoin and just what's going on in the macro backdrop right now, because we closed out the week and we are heading into the month of September on a pretty crazy note from a macroeconomic perspective. Okay, so let's read through this. This is just the piece I wrote in this morning's newsletter right before jumping on to record this video for you guys. Once again, some of my thoughts, and then we can jump into the charts and I'll talk to you about what all this is. Bitcoin has officially broken support on the ascending channel it's been in since June. Okay, we'll expand on this as we jump into the charts. Technically, it'd be irrational not to be bearish. Is this the beginning of the next leg down to new 2022 lows? I've been seeing some low to mid-teen targets bounce around quite a bit today. But personally, I don't believe that this will be the case. It's been evident that raising rates were going to be a macro hurdle for months, and we will talk about that because that, of course, is the primary factor that drove not just the crypto markets down, but the entirety of the financial markets down today. Not extensively, just going to touch on it. I will be recording a video on this later this weekend, maybe for Sunday Stock Watch. So stay tuned for that. But again, just putting this on your radar. Actually, don't even have to reference this again. But the Fed meeting at Jackson Hole was the primary reason for the stocks and cryptocurrencies falling today. All right. So once again, it's been evident that raising rates were going to be a macro hurdle for months. That knowledge is priced in for the most part, even if the markets didn't make it seem that way today. What's different between now and a few months ago, though, is that the May to June crash was the byproduct of a liquidity crisis driven by insolvent crypto institutions. Very heavy quotations on institutions, because these guys were not playing responsibly as institutions should be. So insolvent crypto institutions over leveraging themselves and shocking the entire system. It's unlikely that we experience another one of those. So once again, you guys, what happened in May and June was companies like Celsius, was companies like 3AC hedge funds, I guess, like 3AC, Three Arrows Capital, you name them, that were insolvent, that were irresponsible with their crypto holdings, that lied to investors, and that ultimately got the margin call of a lifetime and drove a liquidity crisis into the crypto markets, okay? Which is where you sell so much that there's such a flood of sell-side pressure that there's almost no way to meet that demand, therefore crashing the price. And instilling, of course, fear, because as the crypto markets crashed, pretty much everything was crashing. That was the perfect storm for a very, very bloody market environment, okay? So, that said, the $20,000 level serves as an extremely strong floor for BTC. I think we could come down and test this floor over the weekend. If you guys watch this Sunday, Monday, let me know how this panned out. But the trajectory I've drawn below is what I believe price action will look like over the next 30 to 60 days. Another positive catalyst, so just on a side note, I will also make a video on this at some point in the near future once it gets closer. Anyway, another positive catalyst for mid-September is the Ethereum merge. It's going to be a fun one to talk about. Dive into this subject more over the coming weeks, as I just said, but figured it was appropriate to mention given the current sentiment. Okay, which is bad. Once again, not going to read into this. I will do that in the next video I record, but pain ahead. Powell just spoke at Jackson Hole. Apparently, there were plenty of investors out there who did not think that the Fed was going to do what they've been saying they were going to do for the past few months. But again, you guys, I personally think that today's reaction was way too visceral, was way too much of an overreaction, even given the context of what Powell said. It's surprising to me that the markets reacted this way. I do think that once the shock cools down and the dust settles a little bit, that we will make a comeback. I do think it's going to be slow. I do think that there are some significant catalysts coming in mid-July that will really kind of incite further upside. But I will say that until then, until July 13th, and I'll explain why that's the specific date in the next video I record where I go more in depth on this Fed meeting and what's going on with interest rates. I do think we'll pick up in mid-September. Again, we'll cover that in the next video. But for now, I do think we could see some short-term downside. Again, it's pretty rare we see a drop like this. Just really pick back up quickly and just shoot back to the races. But I do think we can slowly but surely rebuild over the next couple of weeks. And then once again, come mid-September, as you can see, just this, again, I have it pretty drawn out for you. I really don't need to explain much here. But I do think that come mid-September, there will be fundamental catalysts concerning the Fed and inflation that will drive us higher into the month of October and into the fall winter months, okay? So, again, let's discuss the support line that was broken. Bitcoin. Since, the major sell-off, we can get rid of this guy right here. Obviously, Bitcoin in a major downtrend since November of 2021, I guess. We really don't need to zoom out that far. But Bitcoin in an evident longer-term macro downtrend. Series of lower highs and lower lows. Big sell-off we saw once again back in May and June, early June, I guess, catalyzed by all of the debauchery and all of just the irresponsibility that was going on in the crypto space a few months back. Since then, have been in a very, very clean ascending channel. Again, very, very obvious, very evident, not quite. As you guys know, the reason I have it drawn like this is because I really never like counting just top line touch points. Sorry, you guys, my gardener's outside if you can hear that, but it's all right. Adds to the realness of it, right? But I never like using these single candle wick touch points in doing it. So again, a lot of traders could go like that, and that creates just for a very unrealistic trend line, in my opinion. Like, you could go like that, and sometimes Bitcoin is weird in that sense, where traders are just so anal about it, and they do use those individual touch points to create their lines of resistance and support. But just for future reference, many of you guys know this already, but I do want to reiterate it. For me, I like having at least 3, 4. The more the merrier touch points on a trend line. And also, when you're drawing an ascending channel, the more perpendicular these lines, like these two white lines are this ascending channel, the more perpendicular, the better. Okay, so just a little trading PSA right there. Anyway, in the wake of all of the Fed pandemonium this morning of the NASDAQ down 4%, S&P down over 3%, freaking Dow down over 3%. That's crazy. Bitcoin did sell off, and Bitcoin has finally broken this line of support of the ascending channel that we've been in once again for months now. This is bearish. As I just said over here, this is bearish news. But again, Bitcoin, as we zoom out, Bitcoin, of course, has a very, very significant level. That is $20,000. That is the high that we spent some time under. That was the initial high, I should say, of this current bull market, of the rally that began in December of 2021. That was, of course, the notorious all-time high set way back in 2017 over here. And that is a big reason that it was an initial ceiling as well. Again, historical ceilings tend to come into play as ceilings over time and floors over time. So again, all-time high in 2017 acted as a very, very significant ceiling for, a solid month or so back in November. Once that all-time high was broken, once that prior all-time high was broken, that's when things really went berserk. And now it has finally come back into play. This is what many consider, and what I've said many times on this channel over the course of the past few months, the official reversion to the mean, which is where an asset that has gone crazy, that has experienced a bull market cycle, and maybe a little too much hype and a little too much pandemonium, and maybe some inflated values, which absolutely happened here and in many growth stocks as well, when it revisits the initial high from the existing rally, or the previous all-time high from the past rally, which lines up perfectly, of course, with $20,000. That is a good sign that we have officially reverted to the mean. So again, this is TA 101 right here. Historical ceilings, historical floors will come into play as new ceilings and new floors, okay? Previous resistance, new support, or previous support, new resistance, all that good stuff, okay? So again, given the fact that I do not believe there is another liquidity crisis coming, I don't think that there is any reason. Of course, there's always the potential for a black swan. You guys say, fingers crossed, knock on wood. I mean, this is metal, but knock on wood. That's no nuclear war of any sort is declared. Nothing crazy happens. Again, a black, just what you guys know as a black swan event, something that is uncalled for and drastic. Unless a black swan event happens, then I don't think another liquidity crisis comes. And I do think $20,000 will act as a solid support for Bitcoin. So feel free to screenshot this chart if you guys want. Again, of course, if you're subscribed to the newsletter, you can just go into the newsletter and screenshot that. But yeah, please let me know down below what you guys think is going on with Bitcoin. If you think Bitcoin can recover, or if you think $12,000, $14,000 is coming. As always, explain your rationale, explain your logic. And I look forward to talking to you guys downstairs in the comments. If you want my daily newsletter, this is just Bitcoin. I'll just go up. We talked about the S&P. We talked about a few of our favorite growth names and some price targets that I'm actually, even in the wake of all the craziness that was going on today, I am still bullish on, believe it or not. And I actually gave a few of my mid-September to October price targets for some growth stocks that, once again, I'm still excited about and I'm still very positioned in. So if you do want to know how I'm trading on a day-to-day basis in my personal portfolio, if you want the multiple newsletters I send out on a daily basis as well, that's going to be the first link down in the description box below. You choose your pricing plan. It's completely up to you, but you can't always unsubscribe if you don't like it. I don't think that's going to be the case because once you're part of the Waves fam, once you're part of Waves Capital, there's no going back. So if you do join, welcome to the winning team in advance. I'll see you in there. And once again, I'll talk to you downstairs in the comments as well. Until next time, always remember, take action, make waves. Peace, team.